what is money at the end of the day? Money is just a crystallized form of your economic energy. It is your skill set, it is your knowledge, it is your time. But in a world of artificial intelligence, AI or robots will find Bitcoin to be valuable because it literally is energy backed currency, right? That is not controlled by any centralized entity. A lot of these Bitcoin treasury companies use enterprise value to calculate mNAV, right? I believe that's incorrect because enterprise value is just common shareholders plus the preferreds plus debt obligations minus the cash. As a result, I believe a lot of these mNAV calculations that are shown above one mNAV is not truly correct if you're purely a common shareholder. Definitely, you need to know Bitcoin inside and out, or else you should not be a Bitcoin treasury executive, right? Because if you can't explain to retail investors, you most certainly will not be able to explain to institutional investors.
Hey, everybody. Tyler here with the Bitcoin Treasuries.net podcast. And today I'm talking to Peter Duan. He runs the Bull Standard, and he's tracking Bitcoin institutional adoption and treasury company strategies. He's a former wealth manager and has worked in traditional finance, and he turned Bitcoin analyst. He's built one of the go-to resources for monitoring corporate Bitcoin treasuries and investor relations. Peter, welcome to the show.
Thanks for having me, Tyler.
You got it. So to lead off, what's Bull Standard and how come people in the Bitcoin treasury space should be paying attention?
Yeah, thanks for pointing to that. So, just a little background on me. As Tyler alluded to, I've worked in traditional finance for my entire career, which is 14 years. Started off doing structured finance at Cantor Fitzgerald, and then also did a stint at a S&P 500 company doing investor relations. So what is investor relations? Well, let's take a step back. What is any company, especially a publicly traded company? You can think of it, a publicly traded company, as having three components. One is the operations, another is the financial aspect of it, and then another is marketing/distribution. And so investor relations is effectively bridges between the financial and the marketing. So it's strategic financial marketing. Now, why is that important? Is because now you see a lot of these Bitcoin treasury companies are now public companies. And it's a completely different paradigm shift where you need to now not only talk to your retail investors who are most likely your first investor base, but also you need to know how to strategically talk to the more institutional crowd as well.
What are some of the things as you've kind of entered into this Bitcoin treasury space that you've seen, say, Michael Saylor and Strategy do well and other companies? And what things do you think there's kind of a bridge to gap between these Bitcoin treasury companies communicating to institutional investors?
Yeah, great question. First and foremost, you got to know where your place in the marketplace is. So, if you're talking about strategy, you're the 800-pound gorilla. Everybody looks at you for leadership. And so, as a result of that, you have to lead in transparency and corporate communication. And I think they've done a great job of that in the regards of Sailors always, whether it's on Twitter, whether it is in this traditional media like CNBC or Bloomberg or Wall Street Journal, whatever it is, he's kind of always the face of Bitcoin. And on the more technical side, they are very transparent in their dashboards. So they create KPIs or key performance indicators, and they explain to you what those mean, and then also how that affects the business. So they lead in the regards of not only being the 800-pound gorilla, but they also lead in strategic communication. Now, you see companies like MetaPlanet taking a different and probably even better approach in some regards, right? So, for example, as a shareholder, I get emails from them whenever they have a publicly listed disclosure. And that's very interesting, right? Because, instead of me just like hoping something comes across my feed on Twitter, I actually know every time that MetaPlanet lists a public filing so that I can read the filing myself and then, go on Twitter to either explain it or see how other people think about the filing.
I think that's kind of an unlock that Saylor has really pushed into the market. In your background in traditional finance, um, Can you think, are there other companies who are doing it really well and in this communication with shareholders that you think Michael Saylor might have learned from, or other Bitcoin treasuries could learn from in how to do that communication?
That's an interesting question. I won't pretend that I can hop into Michael Saylor's mind to see who he studied from, but I think he's blazing his own path. What I can say is that he is embracing fully the new technology stack, right? So, for example, he for the since he started implementing this Bitcoin strategy a little bit over 5 years ago, he was very active on the podcasting, right? And now you see, more and more of the traditional finance people pivot into podcasts. But now he's a bit too big for podcasts. You don't see that anymore. And he has graduated towards, the more traditional finance world. And that makes sense, right? Because yeah, when you're that size of a company, now you mostly are catering to institutional investors, and at the end of the day, the institutional investors are still on the traditional, financial channels, if you will.
Yeah, I think it's been really cool the way that Saylor has evolved. You know, he's kind of learning this on the go, but he got into Bitcoin probably the summer of 2020, and he's really contributed, I guess, to the mind share in the Bitcoin community so much that some of the narratives that he's talked about on the podcast circuit in the past have become really dominant narratives. You know, starting with number one, the Bitcoin Treasury phenomenon. Now, when you think about that, do you think that Bitcoin Treasury company executives, other than Michael Saylor, do have maybe a responsibility or duty to communicate to the Bitcoin base? Or is it more that they really need to focus on the institutional investors as this trade evolves?
It's definitely you need to know Bitcoin inside and out, or else you should not be a Bitcoin treasury executive, right? Because if you can't explain to retail investors, you most certainly will not be able to explain to institutional investors. Now, institutional investors have different appetites, right? Yes, they have a longer time horizon than retail, so you can actually speak to that part, right? So, for example, right now, a lot of Bitcoin treasury companies are sitting on massive losses on the Bitcoin holdings, right? I think that's an area where it's a missed opportunity or a new opportunity for a lot of these Bitcoin treasury companies to say like, hey, yes, we've sure are sitting on these paper losses, but the thesis underneath is that Bitcoin is a call it a 25% IRR CAGR asset, right? And yeah, there's never been a month where I think it's like 9 months in a row worth of red months, and I think we're in in the ninth month right now. So yeah, these are things that ought to be communicated more to the community. Is that yes, we're sitting on paper losses, but in the meantime, um, through this capital markets use of ATMs and other financial instruments, you get to raise your NAV floor by doing these accretive financial activities, right? And yes, you can you can definitely dip below that 1.0 NAV floor, but that's a temporary thing. And so for a lot of institutional investors, if you kind of draw these draw these lines together, then you can say, hey, this is actually probably a historical good opportunity for you to initiate a position in this.
I want to double click on something you said about, Michael Saylor being able to pivot, on a dime, just educate the market, but also respond to the market, right? Famously in Bitcoin, there's a lot of FUD out there, right? We've heard everything about why Bitcoin should die, about the problems with Bitcoin, from the environmental concerns to the Peter Schiff concerns that it's, fool's gold or digital fool's gold or a Ponzi scheme. Now, some of the FUD, so to speak, fear, uncertainty, and doubt that's come along with strategy was that they can't service their dividend payments. There's solvency concerns, or even getting margin called for people who hadn't done the 5 minutes of research to know that strategy hasn't pledged their Bitcoin as collateral on loans. There was the indexing concerns, which I think maybe is like kind of more realistic FUD that Bitcoiners and Bitcoin Treasuries need to get ahead of. Why do you think Michael Saylor can be so nimble and be able to change gears? We saw him in the December, I guess it was. He added 2 years of dividend payments onto his balance sheet by tapping the ATM for US dollars. So it kind of wiped out that concern that shorts and bears were bringing into it. Is there something special or unique about running a Bitcoin treasury company, or is it just take key personnel in the right places to be able to dispel those narratives, Peter?
That's a good question. So you have to imagine he's now done this for almost 5.5 years now. And so he has that 10,000 hours worth of experience trying to orange pill various groups of people. So he clearly has that experience, plus the fact that he's a MIT trained engineer. So he knows how to talk to the logical component of most investors. Right? Most investors are analytical, and as long as you can kind of, show the progression of your logic, then a lot of these investors will eventually figure out, oh, there's actually no flaws in your logic. No wonder you're doing it in this way.
Yeah, and it's kind of unique how I think Saylor really is sharing that playbook out in the open, and there is kind of a real sense of community even among companies that you would expect to be competing for some of the same marketplace. You've got multiple Bitcoin companies now competing for the preferred equity market in Bitcoin treasuries, and of course, all these Bitcoin companies are trying to find the best ways to monetize maybe their Bitcoin stack, or at least accumulate more Bitcoin than the other guys. So, how important has sharing that playbook been to the entire community? As now, on our website, we're tracking hundreds of Bitcoin treasury companies that have popped up over the last year and a half.
Yeah, it's really important because everybody has seen Sailor to be the de facto leader in the space. And so one part is for obviously legacy purposes, right? He doesn't need the money. But another part is that, a rising tide raises all boats. So it's actually both strategic but also altruistic as well, right? I mean, if you are sitting on that big of a pile of Bitcoin, but you didn't share the playbook, then you could eventually down the road, especially if there's a new administration change, can be seen as like a target for, that being the new Bitcoin strategic reserve, right? And so when you diversify the playing field for other people to hop onto your boat, you not only strengthen your own position, but then you also get to leave a good legacy as well.
One of the things I've covered this year pretty deeply is the rapid pace that Saylor continues to buy in during this bear market, and I've got some theses for why he's been able to raise so much money during this bear market. He's been basically vacuuming up almost 200% of the mined Bitcoin supply, which is about 3,500 Bitcoin per week. So, is there something to you that's been an unlock for Saylor during this bear market, or is it just this, like you say, 5.5 years of persistence, paying off that he's just so good at educating markets on what the playbook is, that there's just pent up demand for it for his products?
Well, I mean, you have to remember that he has a massive ATM program that allows him to do so. So um, he gets to do this regardless of the market conditions. Now, I'm not going to comment on whether these latest acquisitions are accretive or dilutive to Bitcoin per share. Some metrics show that it is accretive, while others show it's dilutive. So I can't pretend to know what his thesis is. However, I do want to point out that during the last earnings call, the very first analyst question that was brought on was pointing to this very fact. He was saying, "Hey, your last three major purchases were dilutive on a Bitcoin per share basis. Do you foresee you doing that going forward?" And Saylor effectively said that was kind of a one-time basis thing, and going forward, that should not be seen as an ongoing theme for the common shareholder ATM.
Yeah. For someone, Michael Saylor famously has said, whoever has the most Bitcoin wins. And I'm just pulling that quote, kind of for comedic effect. It's got to be really hard to resist tapping that massive ATM through any situation. Of course, there's shareholders you have to think about, but he has been really laser focused on accumulating as much Bitcoin as possible. And I'm really curious to see where this next year goes, especially if Bitcoin's price can rebound and have a run up. So I'd like to talk with you, Peter, a little bit about STRC, the stretch product, which has kind of been dubbed by Saylor and his team as an iPhone moment for strategy. Just last week, we saw Stretch end the month of February trading exactly at its par target of $100 per share. And Saylor, this week, as we're recording, he did tap the ATM on Stretch a little bit this past week for his Bitcoin buy. They did increase the dividend to 11.5%. But what's so beautiful about this Stretch product, and do you view it the same way as kind of an iPhone moment or a big killer app or an unlock for strategy that the team was searching for?
Definitely. So just as a reminder for the viewers, now MSTR has issued five preferreds, but out of all of them, Stretch has been the iPhone moment, or the one that has found the most product market fit. So you've seen not only just this week, but in prior weeks and months where it's hit the par value of 100. And again, for those who don't know, Sailor is effectively ATMing anything that's above that par value. And so to date, don't quote me on this, but I think they've ATM close to $600 million of just on Stretch alone, right? And so that's very impressive for a product that's less than a year old. That most people don't even know what digital credit or preferred is, right? And so inevitably, as we enter in a world where you've already started seeing cracks in the private credit world, right? Where I was just looking on Wall Street Journal yesterday, Blue Owl, which has been kind of the poster child of private credit, is now starting to see fractures in their business because they're lending. Their business is high yield lending, effectively, right? Close to high single digits, if not low double digits, to businesses, right? But though their businesses that they lend to are like SaaS companies who are now getting pinched by artificial intelligence, right? And so um, once those investors start really feeling the pinch, they're going to look for other places of high yield, and eventually, it doesn't take much for it to move the needle for stretch investors. But yeah, once they kind of figure out, hey, this is something that's backed by supposedly an asset that has 25% CAGR, that's quote unquote only paying 11.5%, the math seems to pencil out. And so this is a well-backed instrument, and that's henceforth the iPhone moment for the Bitcoin community.
I'd like to dig in on that just a little bit more, Peter. What is it going to take for TradFi to really embrace Stretch and Bitcoin preferreds? We've got $8 trillion sitting in money market funds. Some of that's retail, of course. And, I think Stretch can be a product, especially as it grows, that, even large companies can look to use on their balance sheet. I was at Strategy World last week, and a big theme of the conference was that these products need seasoning, right? Is that a lot of funds, pensions or hedge funds or indexes can't even add a product that hasn't been out on the market for 3 years. The rating agencies are going to need to catch up to this. Are there other things that you think of? And maybe as you've talked to people in the traditional finance space that you spent so much time in, what are you hearing from them, or what's the disconnect that they don't quite understand about these products yet?
I mean, first of all, 95% of them still don't believe in Bitcoin, right? So it just Bitcoin itself needs seasoning amongst the traditional finance world. Now, obviously, it doesn't hurt that the BlackRocks of the world, the Fidelities of the world, and even now the Vanguards of the world, Vanguard allows BlackRock and Fidelity products, but those two giants are some of the biggest asset managers in the world. So for them to constantly come out to talk and orange pill institutions, that's a good start. Then the second start is, you start seeing these rating agencies, right? Right now, S&P rating has given MSTR, I believe, a B minus rating. And as you alluded to earlier, you talked about how MSTR has about 2.5 years worth of dividends. Well, that is actually a reaction from the rating agency itself to show that, they're solvent for at least 2.5 years. And it's just this evolution of seasoning, as you put it, right? I think there was a really good podcast with Matt Cole and Ben Workman. And Matt Cole, for those who don't know, is the CEO of Strive. He has many years of experience at CalPERS managing a $70 billion fixed income portfolio. So he clearly knows, how a big institution thinks about fixed income. And he said very much the same thing, is that like, hey, it takes quite a bit of seasoning, and then and only not only the seasoning, but then you need the rating agency's blessing for a lot of this capital to even be allowed to investigate on what this investment is, right? Um, so let me just take a step back. I think one of the best things in hindsight, I believe, um, for MSTR and Stretch is that Stretch has only been around for less than a year, but it's already experienced a bear market. It's actually going to be the best marketing tool for it into the future, right? For those who don't remember, when MSTR did announced their investment in Bitcoin, they bought, and then Bitcoin immediately tanked, right? And so they actually went below one mNAV in 2022, right? But then inevitably it came roaring back above one mNAV, and they were able to play this accretive dilution flywheel game. So in hindsight, nothing seasons an investment more than when you stress test it during a bear market.
Yeah, that's a really great point, Peter, and one I think maybe some of us don't think of enough, is like in the same way that Bitcoin has rebounded so many times, and it's obvious to people like us, who are all in on Bitcoin, so to speak, that you can try to kill Bitcoin, but each time it comes back, it's de-risked more and more, and the same way with Bitcoin Treasury companies and strategy. You know, One of the big narratives of the last couple of years was the Bitcoin ETFs, and it took I think Larry Fink and BlackRock coming to the table and saying, "Hey, we're putting our seal of approval on this to kind of get regulators maybe over the hurdle." Do you think in the same way that there's going to need to be some leaders with large asset managers that come into the stretch trade, that are pouring money into products like Stretch, that are going to be a catalyst for other institutions to adopt it?
100%. Yeah, it definitely takes the first major player to then start getting the ball rolling. But you're already starting to see it, right? I mean, last year there was many Saylor pictures of him at the headquarters of some of the major financial institutions like Morgan Stanley, right? Like JP Morgan headquarters. I mean, I'm almost certain he didn't post that picture just to have a cup of coffee, right? He's there to talk about Bitcoin and MSTR and the preferred vehicles. So it only takes one. And I was also last year at the Bitcoin MENA event in Abu Dhabi, and so he's not he's not immune to talking to any groups of people. Of course, would he prefer to have a Morgan Stanley or JP Morgan buy his products? Sure, but he was also pitching sovereign wealth funds, right? And so that's just the evolution of where everything goes. And if we take a step back, Bitcoin is one of those few and rare assets where the retail investor, because we're so small and nimble, that we get to front run Wall Street, right? So the lack of consensus is our alpha. right? And so, but of course, with that lack of consensus comes the volatility as well. So you and I are experiencing the downturns right now, but as long as you do your homework during this downturn, you get to ride a potentially very fun bull market up.
A lot of our listeners are paying attention to the big Bitcoin Treasury company names, and some of the smaller ones are trying to differentiate themselves, as well as the big ones, Peter. But you know, uh, I'll put you on the spot here a little bit. How do you think about, as we move into a new era of differentiation? Are there yield opportunities for Bitcoin treasury companies to either use the options market, maybe use lending, maybe try to monetize their stack on the Lightning Network? There's been different ways that companies have raised capital. A strategy famously used convertible bonds as a way to really get the volatility cranking in their stock. Are those opportunities interesting to you, or how do you see that evolving in the future?
They're definitely interesting to me. I think once you become a publicly traded company, Saylor's absolutely right in that the world of the capital markets open up to you, which allows you to do a lot of things that just a retail investor like you and me cannot do, right? And you alluded to some of them already, like these convertible bond markets. Now, I want to caveat that there's a reason why MSTR has stepped away from the convertible bond market, and that's because 90% of those investors are just hedge funds who are looking to harvest the volatility rather than trying to go long the position and hoping that you will go and convert into the money from a debt instrument to an equity instrument. But that being said, there's a world of other opportunities that's out to be explored. I think one great example is many of your listeners who do know me know that I'm a massive Metaplanet bull. And one thing that you can see them doing really well that I've yet to see others do at scale, at least, is their cash secured put underwriting position, which allows them to generate a significant amount of income. And even if the income is not generated, they're effectively buying Bitcoin at a discount, right? And so that's a big differentiation because um, they also are looking to issue not one but two preferred instruments, and they're looking to the cash secured put underwriting program to fund the preferreds as opposed to funding it via the common stock ATM, which some critics of MSTR have called it Ponzi adjacent, right? Now, I'm not going to use those words myself, but I think when you keep it at an arm's length, by actually pointing to a cash flowing activity, I think that's going to really separate you from the rest of the crowd.
Tell me, Peter, what was it that convinced you that Bitcoin was the asset that either could or should underpin credit markets? And then after that point, tell me how you did get turned on to the Bitcoin treasury trade.
I mean, how much time do we have? It's it's a longer story, I suppose. I guess the first part of your question was probably like, how do I get orange pilled or something like that? Or um,
Sure, sure.
I mean, you know, uh, so this is a bit of a side story, but it's related, right? I became a Christian like 4 years ago, right? And I don't know any Christians, like serious Christians, who heard about Jesus for 30 minutes and became a disciple, right? It's one of those things where you have to analyze and reanalyze and suspend your disbelief and just reinvestigate time and time again, and that's the same thing for Bitcoin. You do need to spend that call it 250 to 500 hours of requisite studying, whether it's reading that phenomenal book behind you, Broken Money by Lynn Alden, or the Bitcoin Standard, or listening to Saylor's podcasts. You have to constantly analyze, like, is there truth and logic behind what they're saying in order to give your conviction. So for me, a big kind of unlock was the fact that people commonly say that Bitcoin's not backed by anything. Well, that's not true. It's open source software backed up by mountains of compute, right? Which is hardware plus energy cost, right? And so with a hard cap supply of 21 million, with which currently, as we speak today, 95% has already been mined, plus the need for energy and how much like the hash rates have gone up over time, then you can roughly kind of mentally compute like how much energy one Bitcoin represents, right? Because if we like, what is money at the end of the day? Money is just a crystallized form of your economic energy, right? It is it is your skill set, it is your knowledge, it is your time crystallized into a form of medium of exchange that other people will recognize, right? But in a world of artificial intelligence, where the cost of intelligence collapses to the price of electricity, plus 5 years or 10 years down the road maximum, we have robotics. So you're seeing the collapse of intelligence with the collapse of physical labor. At that world, you have to ask yourself what has value, right? And to me, AI or robots will find Bitcoin to be valuable because it literally is energy-backed currency, right? That is not controlled by any centralized entity, which is proof of work. So that's a bit of a long-winded way to answer your story, but that was kind of like a major unlock for me, at least.
Yeah, I love it. It's like it's the longer you're around Bitcoin and understand it, and we all contribute, to this mind share, or maybe it's reading another book on Bitcoin. There are just like so many more narratives that we can feed into the story, and that's that is the hard battle, is right, being able to tell this story in a way that can capture the minds and the attention spans of everyone that we talk to about Bitcoin.
What I love about Bitcoiners is that in order to really fully believe in Bitcoin, you have to be willing to unlearn a lot of things. And the most intelligent people that I know are not just simply high IQ, but rather they're willing to accept new information, pass it through their own filter, and see if they're willing to change their own behaviors if the new information presented to them is superior to what they know, right? And so a lot of Bitcoiners, whether they did graduate from good universities and worked on Wall Street, or they're plumbers, right? It doesn't matter in the regards that it democratizes the ability for you to access the best source of money, so long as you're willing to suspend your own ego and do your own homework.
Yeah, that's a good point. I think, just having been at a Bitcoin conference recently, it's like, the people you're rubbing shoulders with and talking about Bitcoin, talking about strategy is, I think most of those people are really high on an openness scale, right? They're
Yes.
open-minded to new ideas. Um,
Yes.
but that does make me think about, some conversations I've had, maybe on X, and maybe it's just trolls and the nature of, debate that's on X. But there are a lot of Bitcoiners who, are still bearish, I would say, on Bitcoin treasuries. That's fine. We don't all need to be raging Bitcoin treasury bulls, but I think, if Bitcoin's for everyone, right? So, we saw Michael Saylor's interview with Danny Knowles on what Bitcoin did, and I know that was a bit of a controversial thing, and I understand where both guys were coming from. Saylor was like, "Hey, this is capitalism, baby, and investors are going to make their own choices," and I think Danny, the What Bitcoin Did host, was kind of like concerned about retail investors who aren't doing the research kind of getting wrecked. That was I think a component of their dialogue that may be where they were talking past each other. But just today in my mentions, I had published an article and I had Bitcoiners talking about risk of the preferred equities, which certainly wouldn't say any credit instrument isn't risk free, but for someone who's maybe a Bitcoin maxi, talking about the risk of a say stretch on MSTR's balance sheet, that being risky, which it's just backed by a massive stack of Bitcoin, has like a bit of incongruence with me. Or like how do you feel about the Bitcoiners who are almost, it seems like, particularly critical about strategy and Bitcoin treasuries?
Listen, everybody's entitled to their own opinion, as alluded to. You know, uh, is some of it valid? Yes, it is valid, right? Should one entity own eventually 10% of the supply? Okay, well, that's a potential concentration risk. Okay, fine, I believe that. But then to counter that, right? Hal Finney himself um, used to write about the fact that he sees a future in which there's Bitcoin banks, right? So what do you think MSTR is going to be? MSTR is going to be the central bank of Bitcoin, right? And so, I think at the end of the day, it's healthy to have intellectual debate, but it is unhealthy to just simply yell at each other without any proper discourse, right? And that's why I think, a month ago, I invited a couple of these prominent critics to join me on X Spaces to just talk it through. Now, the funny part about that is, comic. He also goes by Little Retard as his X X username, but he's actually a very intelligent person. He's on the personal side, he's sold several software companies to private equity funds, so he's a very smart investor, right? But at the end of the day, we ended up agreeing more than we disagreed. But I think it is the posturing, the ego on both sides, really, that needs to be suspended in order for us to find a common ground.
Yeah, that's a good point. We get in our little echo chambers. Um, we all fall victim to not testing and retesting our theses, and that's something that I think we always need to update. In talking Bitcoin treasuries, that's something it seems like Michael Saylor is always doing. He has the humility to change his mind in public. It's a very public thing that strategy is doing, is executing this playbook for the world to see. So, Peter, where do you think this goes in 2026 and beyond? Maybe over the short term, medium term? Are we going to see more tempered Bitcoin bull markets? Is there a spring coiling? Are we going to see, Bitcoin go to the moon? I know it's tough always going on record because none of us are ever right precisely about how these things are going to happen. But what do you think Bitcoin treasuries? What do you think strategy looks like in the next bull market? And what do you think that bull market is going to feel like?
So you will never catch me giving you a price prediction on anything. However, I'm just going to lay out the fact that MSTR has survived a previous bear market before, where they traded below one mNAV. MSTR is around one mNAV, if not slightly above. Inevitably, when a bull market returns, they're going to have a reflexive benefit out of that. Um, I'm almost certain that they're going to reach 1 million Bitcoin in the next 5 years. And then you just apply that to, okay, where do you see Bitcoin 5 years from now? Or when do you think it'll hit 1 million, right? And so that's like pretty simple math at the end of the day that requires patience. And I think it's interesting that a lot of hardcore Bitcoiners who do not believe in Bitcoin treasury companies have this kind of cognitive dissonance where they're able and willing to hodl Bitcoin for years without having any paper returns. However, when it comes to Bitcoin treasury companies, they somehow immediately switch to a trader mindset where, oh, if the company hasn't made profit for me on a paper base form in less than a year, it's a complete failure for company. So that's a bit of an interesting dilemma to me. But at the end of the day, again, it goes back to what I talked about earlier, which is what is the world that we're entering in, right? Well, in my mind, using again a Christian analogy, I view Bitcoin as the financial Noah's Ark that is unsinkable. and that there are three major storms that's coming down the pike, right? One, and I don't know exactly what order it is, but I think these storms are coming one after another. Okay. One is AI, which we already talked about. That's already starting to displace jobs. We saw that through Jack Dorsey's own company, Block, where he laid off 40% of its own employees, but the company experienced a 25% pop, right? And this is capitalism, baby, right? People are going to observe that and say, hey, if I can cut overhead and my stock gets a pop, how can I implement AI faster, right? So AI is the first storm. And as I said earlier, in due time, robotics is going to follow, right? That's the second storm. And then the third storm is what Ray Dalio would describe as the end of a long-term debt cycle, which means a lot of money printing is going to happen, right? And so again, in that world, what do you want to own? Yes, definitely. We're Bitcoiners, you and I. Have your cold storage Bitcoin. But if you're trying to outperform Bitcoin, right? What's better than Bitcoin is more Bitcoin. Well, the best Bitcoin Treasury companies will find a way to generate Bitcoin yield that will offset the cost of the operations, right? A lot of people don't think about that. In my observation, a lot of people don't think about that it is not just the Bitcoin holdings that's the value of it, right? It's also the staff that you have to pay. It's also the stock performance bonuses that you have to pay. It's also the fact that these preferreds are not risk-free in the regards that's free money. It actually eats into the CAGR of the Bitcoin that you're doing. So, this is an opportunity to plug a good friend of mine, Bobby, who created a CEBE tracker, which I believe is a superior measure to Bitcoin per share, which takes into account the preferred equity, expenses and stuff like that, to actually give you what would look like an expense ratio if you were to buy this as an ETF or a managed fund.
Can you tell us more about that CEBE ratio?
Yeah, I don't want to. I'm not nearly obviously as fluid into it as he is. I actually would recommend you to have him on your show. But it's just his observation that, you raise the money from the preferreds, right? And you add it to Bitcoin per share. But that's yes, that is true. But at the same time, that is a obligation that you have to pay into perpetuity, which means it partially offsets the CAGR of your Bitcoin, right? So I think that math seems to make sense, but a lot of people just automatically assume that, oh, you can just, dilute and then just add to Bitcoin forever and nothing happens to it. I think that's wrong. And another note is a lot of these Bitcoin treasury companies use enterprise value to calculate mNAV, right? I believe that's incorrect because enterprise value is just common shareholders plus the preferreds plus debt obligations minus the cash. Think of it another way as somebody writes a big old check to not only buy your commons, but buy your complete company corporate structure, right? Now, obviously, if I'm only a common shareholder, I don't care to own the other things. Well, my mNAV should be calculated net of the preferreds and the bonds. But and so as a result, I believe a lot of these mNAV calculations that are shown above one mNAV is not truly correct if you're purely a common shareholder.
Yeah, that's a really good point on the enterprise value. I can see why companies are doing it because it does tend to paint a little bit of a rosier picture when you look at the bottom line mNAV.
But that's like the importance though, right? It's like, hey, if you like transparency and honesty is key, right? And so now you're a publicly traded company, and that's where the investor relations side of me really like kind of is pricking a little bit. Is like, hey, if you're trying to introduce a new standard, then you have to be honest and transparent through and through, right? Painting a rosier picture will give you a temporary bump, if that. But if people do not trust you, they will not give you your capital, and you will just add to the FUD that already exists in the marketplace.
That's right. Transparency, if anything, we've learned is key, and especially as we roll out new KPIs or even more Bitcoin native KPIs, it is important that those are really scrutinized by the whole community. I think because yeah, we don't want these Bitcoin Treasury companies being set up to fail. You made so many great analogies. I love the Noah's Ark analogy. I think Bitcoin really can be that hope in a sea of chaos, even though we know the money printing is coming, and eventually fiat currencies will have some extremely chaotic times. But I think Bitcoin, if nothing else, offers a lot of hope. We've covered a lot of ground here today, Peter. Tell everyone again where they can find you and see what you're building with the Bull Standard.
Yeah, so you can find me on Twitter at BTC Bullrider, and then my website is www.bullstandard.com. Over there, I am starting to track various Bitcoin Treasury companies and their filings. And specifically, I'm highlighting what they did right for other Bitcoin Treasury companies to look at in regards to financial communication, but then also what are the areas of improvement that can hopefully, in a bear market like this, bridge the gap between the share price and what it's actually supposed to be worth.
Awesome. Thanks again, Peter. One thing I have all my guests say before they leave is stay orange.
Stay orange, baby. Let's do it.
All right. Ladies and gentlemen, the BTC Bull Rider, Peter Duan.
Thank you.